when anything goes out on the Great Highway, good luck. You're gonna.
If you want to turn your
Sure,
I
I
think you start out there at
The Great Highway is it's a expansive run, usually in the fog, and it's just it's tough. It's tougher than it looks.
Okay, so my wife has done that. The one with the Tiffany bracelet, right?
Yeah.
And all the women are running like this. Toward
Right.
the Tiffany bracelet.
My wife's the same way.
Is that the deal? Like if you cross the finish line?
You got a Tiffany necklace.
What is it? It's the.
Can you turn down my a little bit? Just
it's really cool.
like these guys.
Nike woman running thing. My wife lost hers.
I think that went up.
Tried forever to find another one.
Couldn't have gone up. Oh, wait a minute. I'm number 1. You're number 2.
Yeah.
How's that?
Much. Oh yeah, better. Good.
All right, guys.
Sporting a new do, Edward.
Oh, I just got my haircut today because I figured, in fact, he even said, listen, if you're going with Mark to Miami for business, you got to get your haircut. So I said, okay.
Did you get Manscaped too?
This is a PG-13 show. Like going down
well,
that
manscaping
road.
includes back and chest
Okay,
and other areas. It's not just all.
Ready?
Let's get on.
All right, so who's going to start us off?
I will.
Okay.
And we can dovetail it. I'll talk about one of my favorite economists that I
Let's comment on that one. This is Reds or soft.
Okay, you guys ready?
Yes.
Let's do it. Here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms, Rob Spinosa of RPM Mortgage, and Mark Cooper of HL Commercial. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for 3 tanning certificates given away during this show. And those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Check them out, tanbella.com. Today's trivia theme, since we're getting close to Christmas after our Thanksgiving holiday, is Christmas trivia.
Nice.
All right. Mark, what you got for us today?
Got some new stuff here. One of my favorite economists, California-based, that I follow a lot, who was one of the rare economists who predicted in 2005 the bubble bursting and was widely ridiculed for taking that position and later turned out to be prophetic. I follow him a lot, and what I've liked about him is he's very pragmatic, and he's California-based, which we're very concerned with here. And to date, until the most recent newsletter that just came out this month, to date he's been rather bullish and had not been forecasting any changes, recession or real estate or otherwise, until the election of Mr. Trump.
Wow.
And his newsletter that just came out starts out by saying the election that put Donald Trump in the White House was a shock to the vast majority of pollsters who were predicting a win for Hillary Clinton. I think it was a shock for all of us. The outcome was also a shock to us here at Beacon Economics. Our economic outlook over the last years has been based on the prediction of a Clinton win. Our view assumed that her administration would largely continue current policies, and that combined with continued political gridlock, which is one of my favorite things. I love know-nothing Congresses, because if they don't do anything, it means no new laws, right? I mean, just leave us alone, in theory, yeah. Anyway, they thought his prediction was continued political gridlock would reduce the chances of any major policy change. And so with that prediction of, previous prediction of essentially more of the same and no major policy changes, he was predicting a rather slow growth, but no outlook of a recession. However, he says now the outcome of this month's election changes our output. What we know is that the potential upsides are limited, but the potential downsides, according to them, are enormous. And he basically goes through 3 things that concern him as an economist about the future of the economy in the near term. And I'll read you those 3 right now. He believes that slashing taxes, if in fact that's one of the things that Mr. Trump does, will create a modest positive impact on growth, maybe in the short run, but only by blowing out the federal budget deficit. Now, interestingly that he takes that position, because again, a lot of smart people happen to believe that when you cut certain tax rates, it actually can accelerate the growth of receipts, depending on on whether they are successful in repatriating, for example, the billions of corporate dollars held overseas. So we'll see. So I don't know that I necessarily agree with that, although here I am disagreeing with an economist.
How dare you?
Number two, if the United States under Trump ends its commitment to free trade and backs out of NAFTA or WTO and starts a trade war with China, the result could be sharply falling imports and exports, which would be a huge disruption for supply chains and a potentially sharp rise in consumer prices, hence inflation.
Even China's prices are going up a little bit, aren't they?
I would be the last person to comment on that, but I will tell you that the other angle on this that's pretty interesting is when you talk about population growth and when you talk about fueling all of the projections that companies have for selling their goods and services down the road, you have to accept that a lot of that population growth in a nation like the United States, Europe is no different, is fueled by immigration.
Well,
so
and
if
then
you take a wildly different immigration policy.
And then number three, you hit it right on the head. Trump has threatened to deport millions of undocumented residents. And he goes on to comment here. Aside from the sheer scale of potential human tragedy here, which I don't disagree with, this too could cause a massive disruption in supply chains and consumer spending. And
well, I'm kind of curious too. How do you round up millions of people? I'm sort of from a logistics standpoint.
You don't, but I guess the question, what I find interesting is, what's the stock market doing right now?
Well,
it's going nuts. And the stock market
went down while the
oh boy, if you were watching that was a wild ride.
Good thing it didn't trade.
But the bond market, obviously, and very pertinent to our industry, we make residential mortgages. Bond market has suffered the worst 2-week period in the last 26 years. So what that tells you is that there is a widespread sentiment out there that Trump policies will be reflationary, meaning that the value of today's bonds will be less, therefore their price goes down, their yield goes up, and lo and behold, if you've been out there looking for a mortgage over the last couple of weeks, you've no doubt felt that.
Well, I'm going to ask Mark Cooper over here, who's been just silently listening to all of this and taking it all
this
in.
Shocking news.
Yeah,
Just passing judgment on us.
Because you're a commercial broker. What are you seeing in the market so far? I know the election just happened, but
right. So here's what I'm seeing now. I do leasing and sales here in Marin, and on the low end, the low end, I do some office space, and I actually had people the day after the election calling to cancel their appointments to see office space because they decided to not open a business in America with the results of the election.
That's California for you.
Yeah. Well, they're already talking about seceding from the union.
Yeah, but how solid was your business plan if it didn't withstand,
Well, I mean, this is like someone who might decide to be an acupuncturist or something.
Okay.
They were just about to open up their first business in San Rafael, and they were just shocked, devastated, and just shaken up on the low end. Now, on the high end, people are kind of dancing in the streets here because they are so happy with the opportunities that they're seeing.
I didn't see dancing in the streets.
Those were protesters, by the way.
Those are protesters.
And also the
celebrating 9/11, right? Oh, wait a second.
Actually, you know what? I bet the investment. I should buy some Eli Lilly stock because prescriptions for Prozac probably went way up.
Oh boy.
Okay, all kinds of prescriptions, but that.
Yeah, exactly. Okay, stay with us. We're going to go. Don't go anywhere, guys. We're going to go to our first commercial break here. Talking Christmas trivia. Okay, in the 12 Days of Christmas, remember that song?
I do.
How many drummers are drumming? Right? That's our question. Stay with us. You're listening to The Best of Investing. Now, remember, you have to call 888-912-1190, and if you're the first caller with the correct answer, you win that free tanning certificate. It's good for 3 tanning services. Don't touch that dial. The Best of Investing. I'll be right back. All right.
Way to alienate the listeners, dancing in the street.
That wasn't dancing.
That was dancing.
It was a mob.
It was a mob, yeah, really. Bottle throwing.
It was a mob.
Oh, that was great.
I mean, it was really
more like
just
that.
ridiculous. And then, oh gosh, they're even having like classes that are being taught, like anti-Trump class. I mean, it's just.
Election's over, people voted, and it is what it is. I mean, regardless of what side you're on.
My daughter, I guess, what is it, in 8th grade, you take a trip to New York and Washington, D.C. So what was it, about 4 or 5 months ago, we signed up for this trip, which happens in February, which will be they're going to go to Washington, D.C., and I think it's probably a week after the inauguration. They're going to be in Washington, D.C., and it'll be very interesting.
So supposedly there's all these death threats against the Electoral College people, because
nobody had a problem with the Electoral College last time.
December 19th. It's like this. They're trying to say, hey, don't vote. Don't cast your vote. Anyway, can we get right into email? Because we've got a bunch of emails.
Yeah, sure.
for you guys.
And you know what? It's probably a good idea because a lot of it touches on what we're talking about anyway.
Exactly.
Okay.
All right, here we go. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf, Rob Spinosa, and Mark Cooper.
We got a party going here.
Yeah, you betcha. Can't tell the players without a scorecard. All right, in the 12 days of Christmas, how many drummers are drumming?
I'm going to say 8.
11.
10.
12.
Oh, that's it.
You guys suck.
Price is right. I get the win.
Okay, let's start again.
That was no Google. No Google was
Yeah,
first.
No Google. I'm out of here.
And they think that it was a symbolization of the Apostles' Creed. I don't know. Okay. We got some emails here. So, Mark Cooper, question for you is: what is a ground lease, and would it ever make sense to invest in one?
Oh, good question. Wow, you guys are tough. Interesting enough, about a month ago, I did a ground lease deal, and that was here in San Rafael. There was a property that was just dirt, and the owner of the property did not want to develop it, nor did he want to sell it. He was approached by a developer who then built a building on it, put a Subway, a nail salon, and a bail bond shop in there.
Okay.
And then later on, so that developer then said, hey, I'll pay you $1,000 a month for the first year and $5,000 a month for each year after if I build a building on your property. The landowner said, great, I'm going to make $60,000 a year for my dirt and I don't have to sell it.
Yeah.
The interesting thing about the ground lease is that at the end of the ground lease, that property reverts back to the landowner. So
How long was that ground lease?
We had 17 years on the ground lease, and the spread, I think we were looking at about a $7,000 a month spread over the income we were taking in versus what we had to pay. So one thing there, when you're looking at a cap rate or a rate of return, it's not like a property you buy for $1 million and you got 6%, and at the end you sell it for $1 million. This is a property you buy, you got a 6% return, and at the end of the time you can't sell it because there's nothing left. So every year that lease matures, it's worth less and less money.
Yeah.
Some people will approach the owner once they have the ground lease and just say, hey, just sell me the land, let's get this done, I want to own the whole thing.
Or just extend the ground, do another ground
But
lease.
what benefit does the landowner have in extending the ground lease?
He's going to get the building.
He's going to get the building back.
Yeah.
So that extension of the ground lease. Now, another interesting thing.
So are there any legal? So if he gets the building back, then what happens to the developer? He's out entirely.
The developer is just like a guy who leased a property and his lease is up, and he's got a skedaddle here. So
also trying to get financing for it.
Financing would be tough. I wish I knew somebody.
Yeah, because you don't.
Interestingly, one of the very first loans I ever did was on a ground lease.
Was it really?
Yeah, but it had like 30 years to go, and we only did like a 5-year loan.
Okay.
So
yeah, I think you were protected there. I think you were protected.
Wow, that's interesting.
Also when you're looking at, I think there it goes. Yeah, you're looking at depreciation as well. The guy with the land has no depreciation.
Yeah,
the guy with the building
he got lots of
fully depreciates his property. So it's really an interesting combination. But you want to look at the leases, the strength of those tenants. How long is the ground lease, and what's your spread or margin over what you're paying? And we do ground leases. If someone's interested in that, I'm seeing them here in California. I'm seeing them in other states. There's actually a really interesting one in Las Vegas that I'm considering right now. So,
really?
Yeah, absolutely.
What's the alternative? So if in a situation like that.
Well, you just stay away.
That.
But I was talking to a colleague of mine.
So where I'm going with that is, if you can build cheaply enough, does it ever pencil out?
Okay, so let's think about that a second, because there are developers who are looking for opportunities.
Right.
One thing, if you're in Hawaii and you look around, sometimes you'll see these things that say fee simple.
Oh yeah, no,
Okay.
there we know, yeah.
Right. So that's and also I heard Irvine, the entire city county of Irvine down there is all owned by the Irvine Land Company. It's all they own everything. So all the buildings, everything that's built on there is all ground leased.
Is that why they didn't put streets, lanes, or circles on any of their streets? Did you ever notice that in Irvine? Everything is just it's just the name of the street, and it doesn't say street.
Oh, interesting.
Right.
Interesting.
Really?
So,
Yeah.
so when you were saying what's the alternative? Well, what's the alternative is you buy something else that includes the land on it. But I think it's an interesting opportunity. There are deals out there. It's pretty common in retail.
Okay.
Because somebody will buy some land, put some tenants on there, and you see this. I'm seeing Taco Bell's right now too. Taco Bell's, Jack in the Box. It'll say cash flow only. So they do make sense. You want a good commercial agent to help you with the diligence.
Discounted cash flow analysis.
Yeah, absolutely. Internal rate of return
There
is
you
what we
go.
look for, the IRR. So, so that's the scoop. But yeah, ground leases, we're doing them, and there are some opportunities out there.
How do people get a hold of you?
My cell phone is probably best, 415-608-1036. My email is mark, M-A-R-K, @HLCRE.com.
Or you drive around Marin and you see any of his signs.
Yeah.
They're all over.
You see Mark Cooper all over the place.
Yep.
That's right. Okay, let's see. Mark Hanf, let's go to you. Question comes in from a listener. It says, how are you able to provide loans so much faster than a typical bank? Of course, I added a little emphasis on it.
Fast funding. Well, at Pacific Private Money, which I am broker and president of, Pacific Private Money, based in Marin County, serving the Bay Area for fast alternative real estate financing situations. The reason is because we most conventional lenders, most banks and conventional lenders, their lending programs are based on lending to the masses, mostly in all 50 states. It's designed not to be subjective. It's designed to be, to follow a certain formula. It's algorithmic. You input scores and income and assets, and it spits out a yes or no or a maybe. I need more information. And they're designed to create a mortgage product that can be sold in secondary marketplaces, and they all have to fit within a certain constraint. And Rob, I know you could probably explain this better than I can, but essentially, when conventional lending is the creation of a security.
Correct.
It's the creation.
It's all about the secondary market. And
right,
the investors
exactly. And so we are technically also creating securities at Pacific Private Money. In other words, someone comes to us for a loan, we approve it, we create the loan documentation, it goes to RESCO. The difference is we find a private individual to invest in that note, or we use our mortgage pool fund to fund that note, which is also private money. So we're using private capital to fund that loan. It's still a security by definition. However, we're not looking to resell that loan. So we take a very subjective and holistic approach to lending. We're like the old banker from 50, 60 years ago when you walked in and you saw the banker who you probably knew your whole life because you grew up in a small town, and you tell him why you need the money, and based on the relationship and his knowledge of you and your integrity and your references, he makes you a loan and he knows that you're good for it. Well, we do something very similar to that. People can contact us with their situation. It's usually local to us. We're experts in the Bay Area and local real estate. They tell us the story or the situation. It's usually a situation where they might have had bank financing lined up, or they would rather use bank financing, but they're running out of time. And that's probably the most popular loan we do, is one that there's time is the issue and they can't get conventional financing fast enough, and therefore they need us to be able to react quickly to save the transaction. And we can underwrite a loan very, very quickly. I mean, literally we can have a conversation with a borrower and we can decide whether we like the loan enough to greenlight it. Then we collect the information, which is really evidence for the story that the borrower presented to us. We create that evidence very quickly. With resources on the internet nowadays, we can pull credit, background checks, property profiles, preliminary title reports. All that stuff can be done within 24 hours, and we can approve for funding a loan literally in 24 hours or less. And then it's really just a matter of organizing the capital and closing. So anyway, for more information about how you can take advantage of our fast funding real estate lending opportunities, give us a call or check us out our website at pacificprivatemoney.com. We got a brand new website, so go check it out. It's very, very cool. Launched this week. pacificprivatemoney.com or 415-883-2150 to call us and leave a message.
Not only fast, but friendly, too. Okay, here's our second commercial break. We're talking Christmas here. In what country are outdoor barbecues a traditional part of Christmas festivities? All right, call 888-912-1190 to answer that question. Don't touch that dial. The Best of Invested will be right back. We have an email for Rob Spinosa that discusses the question. It has to do with higher interest rates and the election. So don't touch that dial. So Best of Investing will be right back.
That's what you get for doing back-to-back shows.
I know. Well, Bruce was supposed to be here first of all at 1:30, and then he called and said, "They're going to be here at 3." It's like, don't be late. And then of course, got caught.
I've got to be here. I'm going to be a little late. But they're nice people. A good bank.
Okay, so we got.
You guys are doing open for Thanksgiving to invite other people tomorrow
Yeah.
for your thing.
Yeah. We have some
On the
other groups
16th,
coming
are
out.
we supposed to, like, is there
There was
on
probably
Christmas
3 or 4
type
people at
thing,
Power
or what?
Line.
Yeah, Bianca's going to
Check it
organize
out.
it just
Okay.
with the staff. We're going to do that. We're not
That's
going to
cool.
invite
Yeah,
outside
it should be
people
good. No,
until
I know.
later
When
on.
we
but we are going to.
last week, she said she
So
was
it's going to be
okay.
like the first hour is going to be
Yeah,
just
yeah,
company
yeah.
stuff,
Yeah.
all of us.
Uh-huh.
Now,
And
tomorrow's
then,
not Mike
and
Macedonia.
then
That's
I
next
know
week.
Lisa wanted to
Quite
invite
a
some
lineup.
like local
Yeah.
friends that
Yeah.
she knows, and we're going to invite a few investors that we like. Of course,
Gotcha.
we had to pass
Chris
clear
said
with
it's tough
Bianca
being
because there's some
president,
investors
you know,
she doesn't.
She gets used to it. She's
Yeah, well, she's done it.
In fact,
Not
you
him because
gotta
he
have
tried to
chapter
kiss me,
buy-in.
and I don't want to be kissed.
In fact, well, Eva was
You're gonna have
wondering,
a
she goes,
team.
I don't know, is it like, and I said, well, I don't really know, you know. If
It'll
was-
be a jokey gift exchange type of thing. It's like a pink elephant.
Oh, is
white
it really?
elephant.
Oh, okay.
Well, pink elephant's when you're drunk. White elephant. It's the white elephant
Yeah,
gift
Game,
exchange.
yeah.
Okay.
Yeah.
I just read
It's
the-
a drunk
Christian
gift
upgrade.
exchange, that's all.
All right, so we'll do your question
Yep.
and then,
More goodies.
okay, ready? Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms, Rob Spinosa of RPM Mortgage, and Mark Cooper, extraordinaire. We like to call you extraordinaire. Of HL Commercial. HR. It's Mark at HLCRE.com. There you go. All right, that was a long email. All right, yeah, there you go. Okay, here we go. Second trivia question: in what country are outdoor barbecues a traditional part of Christmas festivities?
Australia.
Kazakhstan.
Yes.
Ooh.
How'd you know that?
Well, I figured southern hemisphere, so it's summer.
Yes,
Oh,
that's right.
oh.
Typically, it's 100 degrees.
You
Yeah.
use logic. You're like the Google.
So now you're breaking even with
Yeah, well, I
getting the
did-
other one wrong.
Right, and I was 11. I was closest there, but
0, you're back
Wow.
even.
all right.
Square.
Next question,
Pretty
please.
good. Next question. Okay. So for Rob, actually, here it says, my lender told me that rates are higher since the election. Why is this, and do you think it will get better again?
Well, it's not only your lender that's going to be telling you that. It's pretty much going to be everybody telling you that. It's been a rough go, and we alluded to that earlier in the show. Rates are up as a result of the election, and really, if I could talk about a little bit of the mechanics of why that is, what the market is building in right now are two things. Number one is a lot of people feel that the Trump administration will do a lot of putting America back to work sorts of things. So a lot of infrastructure, a lot of things that would increase the national deficit. And what that is doing on the investment markets is discounting the price of bonds today. And so we track bond yield in the mortgage industry, which means, all this said, means more rates are higher. The second piece of all of this is that for some combination of technical factors, a lot of people, not unrelated to what we just talked about, but a lot of people feel that now a Fed increase in December at the December 14th meeting is a virtual certainty. I think the odds today were literally 100% on the people that make the odds about that stuff. So you just have a higher rate environment right now, going into a typically slow time of year from a real estate perspective. So it's all things considered, and it's what people are seeing across the board is approximately 0.5%. So on November, 8th, you were getting quoted 3.5% on a 30-year fixed rate loan. Today, if you go back, that same loan is probably quoting at 4%.
That's actually a large increase.
It's a substantial increase on the rate side, but here's what I've told is a real handy way to do this. If you're thinking about what does that translate to in terms of my payment? Very simple factor is, if let's say you have a $400,000 loan, you take 3% of 1%. And that is your payment difference. So in that case, it's about $120. You have a $400,000 loan, rate's gone up 0.5%, about $120 difference to your payment on that. So the second part of the listener's question is, do you think things will get better? Yes, I do think things will revert more towards where they were for the balance of 2016. We're actually at levels right now that we have already been in 2016, so we forget that easily. But yeah, I think things will get better, although if you are in contract to buy a home, you can't really play that market right now. You have to act on what you have available. And I like to use a saying that pilots use, and it goes that you'd rather be on the ground wishing you were in the air than in the air wishing you were on the ground. Which means
good.
Yeah, it means that right now you can't be in the air. If you go into contract, get your rate locked in, as bad as it may seem, because if things get worse, you'll be happy you did that. If things get better, you may have a refinance opportunity, or you may have a way to get out of that loan in 6 months or a year's time and get you back to where you thought you would be. But you have to be proactive about it. It's a very volatile time. It's an unprecedented time. And let's all remember that a lot of Trump's policies, he didn't campaign on substance. He campaigned on a lot of other things that appeal to other voters in that sense. And so we don't know what his policies are going to be.
I mean, in theory, if the economy gets better, production goes up, wouldn't interest rates go up?
Of course. But then again, if the economy gets better, that's a good thing, right? So it's like, if you're worried about, hey, I don't want to buy a house now because rates might go up. Well, if the economy's better, is that it's necessarily a bad thing for you? It's not. So.
Well, and one of the things that Trump has promised to do is to repeal Dodd-Frank. And
well, now you're singing my tune, brother.
Right. Well, although we talked a little bit about this last week about repealing Dodd-Frank, and when you say repeal Dodd-Frank, it's really there's many components to the bill that's been referred to as Dodd-Frank. But what's interesting is that housing sales are down, housing unit starts are down, and a lot of that is being blamed on the fact that Dodd-Frank sought to push the liability of a foreclosure from the borrower to the lender, and that has resulted in a sharp reduction of credit and accessible credit to people with lower credit scores. Because prior to Dodd-Frank, families with credit scores below 720 still had a lot of opportunities to buy homes through a variety of shall we say, creative lending products.
What about just a sensible stated income type of loan program where not so much not a liar loan per se, but what if you, as a lender, had the leeway to create a loan product that accommodated the guy that has 10 partnerships? That guy can't navigate the Dodd-Frank world, even if at the end of the day he'd have a totally qualifiable loan. The process would be so onerous that he could not get through it.
Well, and isn't it amazing how when politicians enter the act and go, well, we're going to fix this, and they create this overwhelming and crushing layer of regulations that just really, it turned it completely 180 degrees from easy credit, too easy credit to too difficult credit. And where's the happy medium?
And that's the thing that I think a lot of people now, on the heels of a Trump election, are looking at the regulation and saying, hey, maybe the pendulum will revert a bit more towards the middle. That would be good for a lot of people, not only the lending industry. Look, I'm all for sensible guidelines. I think some of the stuff that's come out of Dodd-Frank has been fundamentally very sound. It's well-meaning, but the way it's implemented...
Right, like making a loan to someone who could actually demonstrate the ability to afford the monthly payments.
Of course.
There's nothing wrong with that. But
where do you come up with this 43% maximum debt-to-income ratio as if that's a gold standard?
Or just like the people who are wanting to sell their house
and can't buy it.
They need to, you need the money to fix it up in order to sell it.
You have all this. It is a striking, just stunning turn of events when you look at the CFPB, for example, in light of this election. Everybody assumed Clinton was going to win, as you said before, and the way they were running their business, the way they were regulating the industry, even in this case, the recent case with PHH, I won't go into the details, but they were running roughshod over the industry, and now their future is literally uncertain as to whether they'll be in existence.
About that.
Before we cut to the break, how do people get a hold of you if they have questions?
I'm with RPM Mortgage, work out of the Mill Valley office. Maybe the best way, if you're listening and your hands are free and you're not already texting while you're driving, maybe the best way is to just go look mortgage broker on Yelp, mortgage broker Mill Valley, mortgage broker Marin County, whatever, and I'll come up on there. And 415-367-5959 if you are sitting there waiting for me.
All right. Before we get to our break, we do have a couple of announcements here. So First of all, whether you're local or entertaining visitors, check out the new Cityscape Viewing Lounge at the Hilton San Francisco Union Square for 360-degree views that are out of this world. I've been up there. It really is out of this world. 360-degree views. All right, the other thing is, if you want to stay on the water, then go aboard the Hornblower cruises for one-of-a-kind experience. You guys been on the Hornblower, haven't you? Never been on the Hornblower? You got to do it. Oh, you just got
I think that's a co-host door prize right around the corner.
Yeah, that's great, man. They go underneath the
Gotta win
Golden
the trivia.
Bridge. Great entertainment. They got holiday cruises coming up. Got to check them out at hornblower.com. All right, so here's our last trivia question about Christmas. It is believed that this kind person was born in modern-day Turkey around the year 280. That's a long time ago. Who was this person? All right, the first caller with the correct answer wins a free Tambella certificate. Call 888-912-1190. Don't touch that dial. The best of investing. I'll be right back.
No Google.
No Google.
No, we're not going to.
No Google. No Google.
So are you running races and stuff? Are you
I have not been
Yeah.
training, running a lot.
I'm a weekend now, so
Good.
we timed my mile yesterday, 7:25.
Not bad.
I
Not bad
haven't
at all.
run since high school.
Not bad at all.
Last time I did the mile.
No.
Yeah. But I guess John Skinner's doing some of that. A real estate agent
Yeah,
in my group,
yeah.
and he's been doing the San Francisco thing. So,
Good for you guys. Yeah,
Yeah.
it's
So we got, I guess, 4 people in my chapter doing the half together.
good. It's
So-
fun to do it with friends.
Yeah. Well,
I had a 12-year dedicated period where I was running, doing triathlon and whatever, but now as a parent, it's just been real tough work.
Well, yeah, my youngest is 13, so
That helps.
she's, yeah, that's
So probably go out there and hand your ASS to you. Track.
Mark, what did you bring? Did you bring any
Oh, the
anything?
clip art? I did not. I did not bring any.
Clip art.
I
Oh,
did
those aren't
not-
yours?
No, those are, he was
those are
sharing.
Rob's, okay.
He was sharing,
All right.
but
This is all about.
You just continue to talk about
And
Trump
I
and
think, yeah, I
stuff.
think.
there's just too much material here.
No,
I mean,
And this one is about rents being down in Marin.
I
Uh,
saw, no, I saw that,
But it's residential.
but I could comment on commercial rents too.
We got the one in Petaluma.
I could segue.
We could roll. Yeah, I think we can cover the election stuff.
Remember the one in Petaluma? You want to take a little notes on that?
I want to know what Petaluma was. You know, I'd love to hear like true like deal stories.
That's what
he-
Like
yeah,
if you
that's-
guys interesting deals, I want to hear it.
Yeah,
Let's see
we're saving this guy. from,
colorful stories.
Yeah, I just
First time, so I can react while we're live.
Yeah.
years ago it was easier for me to do it because I was usually involved in most deals.
Yeah,
Now
it's-
I'm just
Now you're
all
just
I'm-
like at the golf course.
He's just
right?
the rainmaker.
I know.
I've
right?
spent the entire day on 4 extended hour and plus 90-minute calls and arrived here completely brain dead. So
Yeah, it's,
I can bullshit this stuff all day, but ask me for deal of the week and I just completely draw a blank.
Okay,
So-
I mean,
Well, you
I
could-
can come up with
I either
anything
want to
you
hear like a slam dunk or a train wreck.
no, I've got stuff too. If you want to,
Okay.
go into that
That's
direction.
all right.
Yeah.
Yeah, you guys, you runners, man. I am not a runner.
I'm not a runner either. Hey, I'm just
To me, it's a 100-yard marathon.
Yeah.
to the elevator.
You don't like it? It's, no black or
I want
white.
to talk about these two things.
Okay.
What-
Yeah, no, this stuff can
Okay.
go on forever. I mean, it's-
And I assume you read this. So
Yeah, I did.
Okay.
Yeah.
good. All
Okay,
right.
ready? Let's go. Welcome back to the Best of Investing. Again, I'm Everett Brown, your host, along with Mark Hahn, Rob Spinosa, and Mark Cooper. Third trivia question. It is believed that this kind person was born in modern-day Turkey around the year 280.
Kubla Khan.
Jesus Christ.
Saint
No.
Nicholas.
Yes! Saint Nick. You're the man, Mark.
Good job.
All right.
I don't even know who Kubla Khan is.
Kubla Khan.
He's a bad guy from
That's
Star
Genghis
Trek.
The
Khan.
Genghis Khan. It's Giant Mongolia.
Grandfather. Yeah.
Not the Wrath of Khan.
Rather.
No. Or let's see, Genghis Khan was the grandfather. Yeah, and Kublai Khan was the grandfather.
They were both pretty rough characters, from
Oh,
what I
yeah.
understand.
All right.
Okay, you got some.
Yeah,
lots of pages there.
Yeah,
What
we're
do you got?
talking about Trump and the impact on, since all three of us, actually all four of us here are real estate guys. We got a real estate lender, a
We're talking about
residential
a
mortgage broker,
real estate
commercial
investor. And,
leasing agent, Edward. You're
I can
formal.
spell real estate.
That's right.
Okay.
But how is it? You've got some articles here, Rob, that you brought in that opine about how the Trump election might shake up the real estate market, the Bay Area real estate market, and California housing in general. What do they say?
Well, look, I mean, one thing that I think a lot of people struggle with here in the Bay Area, I think when people hear the news about the Bay Area across the country, it gets colored and you're talking about, all these, Google millennial billionaires that just go and buy, like I've got an article here, 31-year-old billionaire buys most expensive home in San Francisco. That's not the average Bay Area home buyer.
No.
To break the news to the listening audience.
And he showed up on a skateboard. Go ahead.
Yeah, exactly. What you see here is you have very expensive housing, number one, and you have ordinary people who are trying to afford it and live in the communities they work in, and it's not so easy to do it. So when you see an increase in rates, when you see, I think it's fair to say, I don't want to ruffle any feathers, but I don't think a lot of people were anticipating Trump would be the president.
Nope.
And here they
Certainly
are.
not here in California.
Yeah, certainly not in Marin County and in San Francisco and places like that. So I think it would be wrong to say, and a lot of these articles allude to, business as usual. I think that we will see some changes in the real estate market. I do think it's hard to know right now. As I mentioned before, the combination of it being this time of year seasonally and the fact that we've had a sharp rate spike over the last couple of weeks that really hasn't settled in yet, and we're on the verge of a Federal Reserve, open market committee meeting where they do anticipate they'll raise short-term rates again. So you just have this kind of bearish sentiment over the market right now. But I do think that overall, if Trump's policies do prove to be inflationary, how could that not have some impact on the Bay Area real estate market? I mean, I see it impacting interest rates, which if regulation stays the way it is, where are you going to go? If rates go higher and you don't have any leeway on your debt to income ratio, that means that people tap out at an earlier level, right? There's no other way to do it.
Well, there's all these people who live in California, specifically in the Bay Area, who say, "Oh, Trump won, so I'm going to move to Canada or some other place." It's like,
Yeah, but I don't think that's going to happen. And if I can get on my political soapbox for just a second, I just hope that all that energy, regardless of how the election went, but all the energy you had against the person you didn't want in, I mean, the lesson I learned in all of this is you've got to apply that over the next 4 years for a real change. I mean,
so far he hasn't done anything wrong.
Yeah, right.
He hasn't been in office,
And I also think that there's a lot of stuff with the housing market that will continue in the Bay Area as it has been, as long as employment stays strong. And that is predicated on the fact that the economy stays relatively robust. We have been, and this is a Trump complaint, we've been in a low interest rate, low growth environment. He wants to change that. So we'll see if the opposite, more inflationary, higher growth rate environment will also sustain Bay Area real estate prices. As far as I'm concerned, rates are still historically very good. Absolutely. I don't see that being the driver of everything, but I do think we should anticipate some changes.
Well, and if you listen to people who talk about cycles in real estate, and you go back multiple cycles in real estate, there is no evidence to suggest that increasing mortgage rates mean real estate prices go down.
Good point.
Actually, the opposite historically has happened, and inflation has also been real estate's been a great hedge against inflation. So again, in terms of the real estate market and what Trump's policies, which are really so unknown at this time, is he really going to do the things that he campaigned on, or will he become pragmatic as he works up to January 20th? That remains to be seen. But I think for the real estate market, certainly in terms of investing, we know the real estate market doesn't move quickly. It's a very slow turning, huge ship on the water, and so there's still opportunities to certainly invest in real estate and make money in real estate. And I don't know that anything that he's proposing is going to necessarily negatively impact real estate as an investment in the future.
Good point. And the other thing I was going to say about Bay Area real estate in general is that you have, for the most part, the industries that impact the Bay Area economy directly. I don't see those changing fundamentally over the near term. And like you said, the change will be implemented gradually, if at all. Yet to be seen on that. And I think that everybody kind of assumes that if there's any change, that means we go right back to 2008, and it's a recession again, and the bottom falls out of the industry, and all the loan programs go away. That's not the way I feel about things. I think that this economy over a lot of years has proven to be very resilient. No doubt it will adjust to whatever the new administration brings. And as long as the fundamentals stay strong, which I don't see any reason why they wouldn't at this point, I think there's a degree of business as usual with that. I do.
And and we're talking real estate, and we don't have any financial advisors or stockbrokers or stock experts here in today's audience, but we're sitting here this week.
Not an audience, but you mean on the show?
On this show, on the guests on the show here. We've had a week where the stock market hit 19,000.
It's amazing, right?
And but also let's keep in mind that the stock market in the last couple of years has been a really poor predictor of future economic activity. I mean, we've seen some pretty big spikes both up and down, and those downward spikes were usually false alarms, and the upward spikes, I think, are also not necessarily an accurate predictor of future economic activity. So, if I were a betting man, I would probably not bet on the stock market going up a whole heck of a lot more in the short term, but probably expect some short-term corrections on the horizon here. But by and large, I just find it really interesting that the stock market, which is supposed to be a leading indicator, would be behaving the way it is.
I'll tell you this. I mean, all this stuff we're talking about, all the unknowns we're talking about, one thing that happens every week in and week out, is we have people come into our office, sit down, and talk about buying a house. And there is still nothing on my mind, or nothing in any of the news or any of these articles we read that would allow me to look them in the eye and tell them in good faith not to buy a house.
Yeah, this is a bad time. Don't buy now. I think you should wait.
Exactly.
Right?
Not even in today's home prices in the Bay Area, even if rates went up 0.5% or God forbid went up 1%. And not because I'm in the business, not because I have a financial interest in them doing it, because my own personal experience, I think a lot of us can speak for this, is where are you going to go anywhere in the state of California, especially here in the Bay Area? How are you going to build any real wealth? How are you going to get ahead of all of these unknowns unless you own real estate? I just don't see another way.
Yeah,
so I remain optimistic about things going forward.
You can come back. You're welcome back.
Yeah. This was paid for by my sponsor today.
And in 2005,
absolutely not.
You can look back and go, those who bought in 5 and 6, they bought with unrealistic credit products that had payment adjustments that were not typical.
Well,
so those aren't available anymore.
Yeah,
so if you buy a house today, you have to be able to qualify for the loan.
Exactly.
The lender's going to make
point.
sure you have enough income to make those monthly payments. So even if you buy at the top of the market now, you're not likely to suffer the same unless you lose your job.
But that existed in 2005 and 2001.
Yeah, that's true. Okay, guys, we're going to cut to our last commercial break. Don't have a trivia question for us, but when we come back, we're going to have just a few more minutes for some closing comments and a deal of the week. Stay with us. All right.
Deal.
So if you want to, do you want to take a couple of notes on this?
Sure.
Okay.
So it'll probably come back to me because I'm not completely
Petaluma?
brain dead, but
Yeah. So Petaluma, 60 acres. There's a house on there, and it's the value is at least $1.6 million.
Is this for sale or what?
No. We're saving it from foreclosure. They're going to go to sale pretty soon.
So you're loaning them money to pay off the bank.
To pay to yeah.
60 acres with a house.
60 acres with a house, and it's got a pond on it too.
I know that you and
Rick and I are.
You and Rick are
Well, it's
pretty deep into this one.
it's a
Because you were involved. That's why I didn't
I know.
get
Well,
deep
it's my borrower. It's my money. And
You want to talk about it? Then, or-
Sure. Okay.
Yeah. That's pretty funny.
I'll just say that.
Sometimes I run into people that the banks turn them down, and I see that there's kind of a thin area where you guys will want someone that they think, well, I've talked to 3 hard money guys, they've all told me no. Yeah. Do you know a good hard money guy? And it's like, if 3 guys have told you no already, it's probably not a deal that they want to make.
You never know though. So
Unless it's because they said no because there's a consumer component to it, and most private lenders don't do consumer lending, and most of them don't know who does consumer.
What do you mean personal residence?
It's on their primary residence.
These guys are people who, We were talking Fred Grange, I think, was one of them.
Fred came and talked to me
Of
about
course
a
he
loan on
did.
his property that
Yeah, of course
nobody in their right mind would ever finance because you'll probably never be able to pound a stick in that
You're talking
60
about out in
acres,
the,
yeah, whatever it is, 5 acres.
what does he call it? Canalways.
Canalways, yeah.
Yeah. You know Fred Grange?
I don't know.
That's a
know
land
Fred-
loan.
Oh, is
that-
this the
He came to your
the
garbage.
garbage?
The garbage.
Yeah,
Came to your
yeah,
chapter.
yeah,
Visited.
Grange box.
Grange box.
Grange
Yeah.
box.
Yeah.
Grange box,
The
yeah.
architect brought him as a guest.
Oh, Fanny.
Fanny. Yeah. Okay, we ready?
All right, having
Ready?
as much money as him,
Ready.
you'd think he'd invest in some teeth.
I know, huh?
Yeah.
It's worth it.
I know.
Dude, it's
Yeah,
like-
kinda, he was old back then, 30 years ago.
yeah.
All right, here we go. Welcome back to the Best in Investing. Last time for today, Edward Brown here, along with Mark Hanf, Rob Spinosa, and Mark Cooper. So we didn't have a trivia question, but Mark, we're going to ask you for Deal of the Week, and
Right, and I was going to throw it right back to you, Edward,
Yeah.
because you just worked on a deal yourself with us at
Rick.
Pacific Private Money with our number one underwriter, Rick Culp, and you went up to visit a property up in Petaluma, and this was a little bit atypical of the loans we generally do, where we do probably 60 to 70% purchase money loans, where people come to us where there's a transaction, even if it's a fix and flip, and a lot of banks aren't doing fix and flips, but more recently we do a lot of consumer type of purchases where they want to close very quickly because they want to compete with cash buyers, or maybe their conventional mortgage process glitched and they're going to run out of time before the seller pulls the plug and we come in and rescue the deal, stuff like that. We've done a lot of that in 2016, but you went to visit a property up in Petaluma recently where we were able to save a family from foreclosure.
yeah,
Wow.
they were going to go to sale. The
Okay.
trustee sale's coming up, and so they needed money very, very quickly.
So they
And that's
received
a-
an NOD.
Yep.
Okay.
Notice of default.
Notice
There
of
you go.
default.
Thank you.
Yeah.
Yeah, all the
these
publishing
acronyms.
happened,
Right.
and basically the guy had a financial setback, but it was like the future looked bright.
Okay.
But he didn't own the house; a relative owned it.
Okay.
So the way we were getting around the rules, in a logistic way, was to have him purchase the house
Okay.
and make him a short-term bridge loan. And there's
Okay.
a small house on many acres, and the loan to value is around 50%.
Okay.
So it looks like a very conservative loan from our standpoint. Should he be able to make the loan, the payments, and if he doesn't, then it'll
Yeah.
be another. He'll be in foreclosure again. But the less than 50% loan to value, we feel pretty.
Right.
And what was different about this is that we used to see years ago when the foreclosure was at its peak, a lot of people who were losing their homes would come up with a straw buyer.
Right. Exactly.
Sometimes and try to sell like short
Oh, we
sale
used to hear
that
the
home
stories. Yeah.
to straw buyers. Now this is
But
different.
what
This-
if?
Right.
Yeah.
This is not
My
a short
brother.
sale.
Yeah.
This is
Like-
actually keeping
Yeah.
keeping a property in the immediate family
Okay.
and through a purchase transaction. And the reason why it needed to be structured as a purchase and not a refinance is that believe it or not, the regulations
Ability
next
to
to
repay,
Dodd-Frank are completely different on
Yeah.
a refinance on a consumer purpose loan versus a purchase. On a purchase, we can structure it as a bridge with a short-term fuse and a balloon, but we have confidence, a high degree of confidence in the now buyer's ability to conventionally refinance. Where if we tried to do a refinance for the existing or the prior owner, then that owner would have to qualify.
You already have
with income.
proven an inability to repay.
Right.
And,
Yeah.
I mean, in theory,
Yeah.
the current owner right now could stave off the foreclosure by filing bankruptcy and all
Right.
that stuff,
Right.
but
Right.
it'll be a much more expensive and longer process.
Right.
It's cheaper to actually borrow it hard money, solve the problem,
Solve the problem. Get
and
out
then
of that state.
Eventually,
Yeah.
Refinance out.
So the point of it is,
Pragmatism.
these are unusual and atypical situations. But if you're a real estate professional out there on the mortgage side or even the realty side, and you ever come across a situation where you know that conventional financing is not going to be a remedy, give us a call at Pacific Private Money, because we are one of the few California private money loan brokers that will do consumer and owner-occupied financing. We can't say yes to every situation. We are under, we are regulated like everyone else, but unlike most hard money and private money lenders, we have actually gone the extra mile, got the licensing, got the underwriting guidelines, and know how to legally do privately funded consumer and owner-occupied type of real estate loans. So for more information, check us out at pacificprivatemoney.com, and our number, 415-883-2150.
And for conventional loans,
Rob Spinosa, RPM Mortgage out of Mill Valley, 415-367-5959. Thanks,
and
Edward.
for anyone who wants to purchase real estate.
Yeah, Mark Cooper, HL Commercial, 415-608-1036.
All right, guys, we're going to cut out for the day. Here's our thoughts for the day. Some people develop a wishbone where their backbone should be. And Ethel Barrymore said, "You grow up the day you have your first real laugh at yourself." Very good. I like that. Okay, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
I prefer the quote by Drew Barrymore. Don't be pushy, pushy. E.T.
She said that to ET? What?
In E.T., she